G'day everyone, welcome to Breakout Wednesday for the 17th of April 2024. It's currently about 10:30 p.m. on the West Coast, obviously just after midnight, 12:30 on the East Coast. First of all, remember, this is never financial advice. We're not financial advice. This is simply a video blog on how one trader sees the market, and everyone needs to take responsibility for their own decisions. Obviously a bit late tonight, so I'm going to just bang this out so I can get to bed. The market's had a bit of a pullback. Yesterday was a bit of a vicious down day. We've had a very good rally, and this is all just normal stuff. I'm not too stressed about it. I just want to quickly, there's a few stocks I've been talking about lately, and I'm just going to quickly rattle through them very fast. So GMD I got stuck in, okay? I did get whipped in this day. I'm actually just still in it, okay? I mean, it's funny, like a lot of gold stocks have held up very well, like Silver Lake, Northern Star, for example. But GMD got hit a little bit. I'm giving it a bit of wiggle room. We'll see what happens. I'm not going to let it start collapsing down here, because then I'll turn a small loss into a big loss, hey, which is the cardinal sin. I'm just giving it a bit of wiggle room. We'll see what happens. Now, when I start getting a bit of a market correction like that, and I start having kind of paper losses in trades, because this is always going to happen, right? Like if you keep taking risks in life and you keep having swings in your trading account, which you've got to do if you want to, make money and have great years and build wealth and all that sort of shit. Okay. This is going to happen. This is part of life. Like the people that make it are the ones that just accept it and realize it's part of business, and they don't let it get to them. But what I tend to do, and I think this is partly maybe just good risk management and partly human nature, but the trading positions I have that are going very well, when the market starts rolling over, I'll take profits quickly. So Oxy, we had this big blow-off candle here, didn't get out on the week, but the next day just bailing out about 68.80, okay? And so I'm bagging profits in stocks that I've been in for a while, okay, in case they have big, retracements. And that's kind of taking those profits and realizing those profits is offsetting some of the losses that I might be incurring on any new trades I took literally one day before the market started correcting, because that's just part of life, right? The other example, Oxy's one example, others GDC, I've trimmed that position greatly, still got a little bit of it, but just don't want this collapsing down back here on a big market down day if this correction continues, and giving up all this hard work that I've done I've just been sitting on my ass, but still it's easier said than done, building profitable positions, right? Because it's a lot of people can't do it. So I'm not going to let all that profit turn into a loss, right? So it's just it's basic risk management in the trading account and managing those open positions, okay? So that you're not kind of turning a really great quarter into a shit quarter by giving it all back at during a market correction, okay? Because it's very easy to give a lot of money back very quickly. Now, what I like doing after we've had violent down days is really, really basic scans. I still do my other scan, but just the most basic scan in the world, just a 34 or 30 or 20, whatever, it doesn't matter what bloody day it is, a 34 period breakup, okay, a breakout day. That's it. I just put 100,000 of filters and do it, okay? This has only found 38 stocks. A week ago, this would have found hundreds and hundreds of stocks, okay? And then I just scroll through this watch list and I see what's actually breaking up right now, okay? And you can do it for yourself. You can see the ones still breaking out, okay? A lot of them are kind of corporate activity, takeovers, that sort of stuff, but a lot of them are not. And it's mainly kind of the gold and some energy stocks which are still holding up, okay? There's some others, right? Like if you look at NXS, okay, it's just 200 days just here, but it's just put in this massive bottoming base, ascending triangle as a bottoming pattern, not as a continuation pattern, massive resistance here, and then a bit of an increase in volume as it breaks out of this base, okay? And so there's always good positions around. The question is, like, if the market continues to correct, the fact is the odds are this is probably going to roll over, okay, and be a losing trade. But if the market's just having a little bit of a pullback within a bull market, within an uptrend, then this might be one of those stocks that's the first to break out, right? And it could double, triple from here. No one knows what the market's going to do, and it's why we have stops and why we manage the risk, okay? But NXS is one of those ones breaking out when the rest of the market isn't, and so it's definitely some shit going on there. Now, the other stock that I'm kind of finding a bit interested in, and I've been talking a little bit about this lately, is NYSE, okay? And you can see all this. I've been bugging around here trying to figure out a bottom, and it's likened to kind of the positions I've been building in Pilbara Minerals, and I've been talking a little bit about Aluka lately. They're all just showing signs of bottoming action. I know they're all a little bit different, okay, in what they produce, but the moral of the story is they're all pretty correlated, and LYC came up in that breakout scan. It is worthwhile doing. I also kind of like doing a really simple scan after we have a few down days sometimes, where I literally just scan for every stock, say above its 5 exponential moving average, and it's such a simple scan. I'm still doing my Dava scans and all my other scans that I love doing, my percent high scan, but I just real simple scans like that, because what I'm looking for is stocks that are holding up right near their highs and still trending up, and they're not doing this, they're not banging down below their 50-day moving average, they're still sitting up here. And so I like the scans I've mentioned, plus my percent scan here, right? Where's it gone? This one here, okay? So I'm just looking for stocks which are kind of within 2% of the last 100-day high, and I'm just looking for relative strength. I'm looking for stocks that aren't getting banged when the market's getting banged, right? And so obviously they're showing massive signs of strength compared to the market, and I'm putting those in watch lists, and I'm trying to, I'm being very, very patient, and I'm hitting them if they break out after forming a nice setup, right? So that's that. Now, long term, the other thing that, I'm thinking when the market starts getting hammered is in the long term, self-managed super fund is an opportunity going to come to add, okay? If you look at like the S&P 500 ETF RVV, it's hardly really done anything, hey? Like it hasn't even made its 50-day moving average yet. Definitely a lot stronger than, say, the ASX ETFs, which just absolutely, the first excuse they get, just bang straight down to the 100-day moving average. So, the US stocks are still so much stronger. Like, let's look at the NASDAQ, QQQs. It's still just sitting up here. This is a 50-day moving average here. It just hasn't even breached it. So it's not as if a correction's really even started in it's just going sideways, right? Like, look at that just objectively. It's just cruising sideways. So, I'd watch that. I definitely think on the ASX, like, there are stocks that are getting, are pretty hammered, right? And, there are opportunities if you're finding, your favorite companies suddenly down 10, 20%, of adding to them in a self-managed super fund. Where you do that is the question, because you don't know how low they're going to go. But, if your dollar cost averaging, for example, into some of your favorite long-term stocks that were up, say the CBA, for example, was up at 121 the other day, but it just falls down to its 200-day, maybe undercuts it. And dollar cost, sometimes I'll just dollar cost average in the self-managed super fund into those, long-term ones I really love, okay, during stuff like this, okay. Look, that's really it. There's nothing massively that I'm looking at right now, because things are setting up and things are going down, but NXS is the main one, to be honest, okay. Got a position in it. It's the latest position. I'm not going to, if the market starts dumping heavily, I'm going to cut it quickly and run like a thief, right? But this is the nicest setup out there I could find, and just got to take it. It's just it's high probability shit. All right, take care, everyone. Chat next week, bye.